Have you ever been watching the market move and just wondered what's really driving the price under the surface? Well, in this video, I'm going to show you how to uncover the hidden truth behind the market using the volume profile and how I use the volume profile as the backbone of my trading strategy to find high probability trading setups on the NQ, the ES, or any asset you want to trade. First, I'll break down how the volume profile actually works and the four most important volume profile levels that you need to know so you can read it like a pro. Then I'll show you the two main ways that I actually use it for trading to find high probability levels, and then using those levels to find low risk, repeatable trades. I personally have made hundreds of thousands of dollars from trading and over $1 million of results between myself and my community. If you want a 100% free futures trading course, visit dantetrades.com/free. So let's get right into it. Let's just start with a little quiz here. So we're just going to start with a quiz. So looking at this volume profile here, where would you say the price is going to head first? Would you choose that the price is going to head to number one or number two? And again, if you don't know, that's fine, just based off what you're seeing here, because I promise you by the end of this, you will understand exactly what's going on here. So type it in the comments, which one, number one or number two. Now, this is another quiz. This is a little bit more tricky. So if you are looking at this, just looking based off this volume profile here, where would you say the price is going to head here, right? Number one or number two, just based off your abilities right now. Number one or number two. So type that in the comments. So volume profile basics. So the volume profile shows the trading activity at each price level. This helps identify where buyers and sellers are most active and where fair value forms. Now we're going to use this onion market example. This is my favorite analogy. So imagine that you're in the supermarket and you're looking for onions. Let's just say $1 is the normal price of onions, right? So this will be considered the point of control. This is where the most transactions occur. This is considered fair value. Again, let's just say for example purposes, the normal price of an onion is $1. So when the price of an onion goes from here, so this is where most of the transactions are happening. And let's just say up here is the price of, let's just say like a $10 onion. If a price goes from like $1 to $10, you're gonna find much less people willing to buy an onion for, $10, or let's just say $3 because it's a little bit more reasonable. But let's just say you're going to find less people willing to buy one onion for the price of $3, maybe a few people, but then the price falls back to the normal range where you see a lot more activity happen, right? So away from the $1 range or the point of control, sellers lose interest if it's below $1 because less people are willing to sell their onions for the price that they are worth. And then above $1, the buyers lose interest because it's considered premium or expensive prices. So in conclusion, the point of control marks the price of greatest agreement of fair value, so normal market price, right? And just think about it, whatever device you're watching this video on, whether it be an iPhone or a laptop, you probably paid the normal retail price for it or somewhere around the normal retail price. You probably didn't pay, 10 times more or 20 times more for the price of, the phone or laptop or whatever you're watching this item on. And the opposite is true, right? You probably didn't pay $5 for an iPhone because nobody's going to sell the iPhone for $5, right? So point of control, reasonable, market price, fair value. Just think about that. So key volume profile concepts. So HVNs, this stands for high volume node. This is going to be a large volume areas where you see strong price reaction. If we look at this here, you can see, like, if you look at these bars of volume here, these nodes, you want to pay attention to where you see like a large block of volume here. So you can see here, like these large bars here, I pay special attention to these and I often draw boxes around these because you just want to be aware of where the large amount of volume is, large amounts of liquidity, because this is where, again, you see strong reactions in these zones and we use them as shields for our stops. And I'll break down exactly what that means here in a second. So the value area is just where 70% of the trading volume happened. So value area high, and we have the value area low. So this green line here, I'll mark mine's green. This is the value area high. And then this red line here is the value area low. So we're going to dive a little bit more into what that means here. So again, where we draw the volume profile, and if you don't know how to draw it, I'm going to break all that stuff down. I'm just going to break it down the concepts to you right now. But when you draw the volume profile for whatever range you draw that from, you can see here this green line here. Value area high, as I told you, that's that, that $3, that $10 onion. When the price gets to the value area high, generally speaking, for whatever range that you're looking at, that is going to be expensive or premium pricing. And we're generally looking for shorts from that area. Now, there's definitely some context that you want to consider when you're going to be just shorting. You're not going to just short because you see a value area high here, but generally speaking, as a general concept, value area high is a good level to consider looking for shorts off of in context. And the opposite, as long as the context matches, and then the opposite is true for the value area low. So you can see here, once we got above this value area low, longing at the value area low or around this level was a good move here. So value area high, expensive premium prices, generally looking for shorts off this area. Value area low is going to be cheap prices, and we're generally looking for longs off the area. Again, all the context and stuff matters, but this is just a general concept so you can understand how these things work, right? So HV ends as your shield. So how I like to think of like high value nodes is it's going to be like a shield. So when you play a video game, right, everybody knows in video games you have this concept of you have like your life bar in your shield. So the bigger the number on your shield, so here this number is 156, but if your shield is 200 or 300 or 1,000, that's going to be a more powerful shield that can take more damage, that can take, more hits from the enemy before it breaks, right? So that's how I think about the high volume nodes. It's just like a shield in a video game when I'm going to be setting my stop losses. So what does this actually mean? Like, how does this look in practice? This level here, this is a high volume node that I drew. And you can see here that I have multiple of these volume profiles drawn out. Again, I'm going to explain to you guys exactly how we draw those out. I'm just explaining the concepts to you right now. So you can see here, we have this high volume node here, and this has also inside of it a value area high. So what happens here, the price comes down, we create a bunch of liquidity and ultimately push pretty strong to the downside, right? So we have a bunch of liquidity built up here and we push very strongly to the downside. So again, what I would be looking for here, we came back into this level because we have a strong high volume node here, excuse me. I will be looking for the price to come back inside of here. And you see how I set my stop loss, here is because we have this high volume node. That means that the price has to push through this large amount of volume to actually like break my trade or to kill my trade, right? Like think about it like a video game. Literally, this high volume node is my health bar, and the larger my health bar is, the stronger or the harder it is going to be for the enemy or the opposite side to push through my trade and stop me out, right? So that's how I think about it, right? So in this case here, we had this high volume node here in confluence with the value area high, and we had literally just pushed really strong down to the downside. So when we tap back into this high volume node, and we know we have a bunch of liquidity here, and this is also in confluence with this value area high, which I told you guys we generally look for shorts. You can see we pushed all the way down, right? We couldn't push through that liquidity because again, we had a strong shield there, really big level of liquidity or volume, and then we just pushed down to the downside. So this is really how I look at when I'm going to be setting my stops and stuff like that. I always consider the high volume nodes and my shield or the level of liquidity that I have in my side or in my trade that would have to be pushed through for the trade to fail. And the more liquidity, the more levels that you have to push through, the better, because that's just the harder it is going to be to stop your position out. So there you go. So how price reacts to these levels. So value area low, value area highs, point of controls, and high volume nodes often act as strong levels of support and resistance. The market is always seeking liquidity. So this is what people talk about when they say seek liquidity. We go from one liquidity zone to another liquidity zone to another liquidity zone. And the market is always seeking liquidity, building new high volume nodes, building new point of controls as the price moves. And scalpers, you don't have to be a scalper. I'm personally a scalper, but you can use this. However, learning how the volume works and liquidity works and order flow and these kind of things just helps no matter what your trading style is. But for me, I'm a scalper. So scalpers use these bounces and breakouts around these areas for high probability trades, as I just showed you guys there. So higher time frame setup. So this is going to be in TradingView. So I'm just going to show you how to use the fixed range value profile, how to mark key levels, the previous day value area high, previous day value area low, point of control, etc. So now we're just going to jump into TradingView here. And obviously you want to go into here and you want to look for the fixed range volume profile. Now I'm just going to draw this for you guys for the sessions that I trade. which I normally trade Asia and London, but if you trade the normal New York hours, it's very similar. So what you would do is the first thing you want to do is you want to go to the previous day and you want to draw the volume profile. You actually need to go to the 1 minute time frame charts. You want to draw the volume profile from the previous day normal trading hours from 9:30 a.m. EST to 4 p.m. EST, right? So there you go. So I'm just going to draw that on the chart. So the previous day, 9:30 to 4 p.m., right? EST. So what you want to do is, now that we did that, you want to mark this on the chart. So you can see this is the value area high. And I'll just show you guys the settings here really quick. The style. You can have your style however you want. This is just how I have mine. You can literally set it however you want. It doesn't really matter. This is my inputs, etc., etc. So again, you just want to take these lines and then you just draw them on the chart here. So you can see previous day PDVAH stands for previous day value area high. And then you just write the previous day point of control. You just mark it there. And then the previous day value area low, and then you just mark it there. And these are going to always be critical levels. When the price comes to these areas and it bounces around these areas, this is where you really want to pay attention. So that's how you always draw, no matter what session I'm trading. I'm always going to draw the previous day levels because these are just key levels that you see like really strong price reactions off of. And the next thing you want to do for me, because I trade London and Asia, so the next thing I'm going to do is I'm going to draw mine from 401. So that's just the overnight session. So for me, some people draw theirs at a different time. They don't draw theirs at 401. They'll start at like, I think like 4:30 or 4:15 or something like that. Me, I just start my overnight volume profile as soon as the market closes, the normal trading session hours. So I would just start that from 401 to current session time. And then when I'm drawing these ones, I just click extend right because these are going to be updating in real time. So you just want to make sure that when the price is moving, when you press extend right, you can see the volume profile kind of shifting with it. This is why the volume profile is also very useful, because it is a in real time tool. It's not a lagging indicator, so it's kind of moving with the price. So you just want to make sure that you press that extend right, and then I'll draw another one. So now that we have that overnight drawn here, then I will draw another one that starts at the beginning of whatever session that I'm trading. So you can go here as well. So Asia starts at 20. So you can go there as well. So now you can kind of see we have in this case, the previous day levels weren't really that relevant because the price is pushed up so far above that. But you can see in this case, we have like these two levels that are overlapping, and you can see we have a high volume node here. So you can see the price is actually sticking out a bit here. So for example, when I'm looking at this is definitely an area that I would pay attention to when I'm looking at here, because we have the overnight value area high, and that is in confluence with the current session value area low. So we know that these levels are strong support and resistance. That's why I say you have to look at it in context, but these two levels in context with each other. And then also as well, we have this high volume node here as well. So this will definitely be a level that I will be paying attention to, right? So this is how I draw these things, right? And if you're going to be trading the normal New York session hours, I would draw it exactly the same. But when you're trading the New York AM session, you want to wait for like the first 30 minutes or whatever for the volume profile to develop when you're drawing the current session. So in this case, because we were trading the Asia session, we started it at 20. But if you're going to be trading the normal New York session trading hours, obviously you would start it at 9:30. And I would probably wait until like 10 a.m. or whatever until we have a little bit more of a volume profile developed. But yeah, that's how I draw it. And this is why we draw multiple of these, so that we can use them in confluence with each other. So back to the quiz that we talked about in the beginning of this video. So did you pick number 1 or number 2? I'm just going to give you a second to think about it. So the correct answer here is going to be number 2. Now, why did I pick number 2? And this is a real trade that I took. Well, we can see here that we had a huge sell-off, right? So we were pushing up, and we hit a huge, crazy sell-off, which is really crazy to see this kind of price movement in the Asia session. And then what happens here? You can see here, this is a high volume node, which is, I told you guys that I draw these boxes here. So we have a high volume node, and then we have the current session value area low, and then we had a point of control there as well. And then what happened was the price pushed through that level of liquidity. And then we pushed through that level of liquidity, and then we came to this level of liquidity here, which we had another high volume node area. Then we had a value area high inside of this high volume node, and then we also had another higher time frame value area high, which we didn't even reach. So basically we pushed through this level of liquidity, and then we tried to push through this level of liquidity as well that we knew we needed to pay attention to, and then we strongly rejected off that. So once we pushed through this level of liquidity, we strongly rejected off that, and then we had already identified this level of liquidity and confluence as well. I was waiting for the price to reject off this liquidity and then refailed this level as well. So we push through, we reject off this liquidity, and then we failed this level of liquidity as well. That would be the double confirmation. And then I was looking for a push to the downside, right? So again, to be very clear, we came down, we had a strong sell-off, we came down, and then we pushed through this level of liquidity that we identified, but we couldn't push through this second level of liquidity, and we had a very clear and sharp reaction to this level of liquidity. So once we failed this level of liquidity, I was looking for us to come back down and refill this level of liquidity and push further down to the downside. And that is exactly what we saw, and that was a $3,000 trade for me. So again, that was just perfectly textbook. We just came, we pushed up, rejected, and failed. And you can see as soon as we closed back below this level of liquidity, we just dumped super hard to the downside. So that was a perfect, beautiful trade. And then let's go to the quiz question number 2. So this one was a little bit more difficult. So again, did you choose number 1 here or number 2 here, right? And the correct answer was number 1. The reason why I got into this trade and what I saw when I was looking into this trade, you can see, again, that's why I told you guys it's important to draw these higher time frame levels. We have a previous day value area high. We have a current session value area high, and then we have a overnight value area high. All 3 of these levels were relatively in the same area, especially the previous day value area high and the current session. They were literally almost the same level. So when you see something like that much confluence, like these 3 levels, especially these 2, but these 3 levels of confluence, this is just telling you, screaming that this is a really important level. And then we had a high volume node like right there as well. So what happened? Again, what we say about value area highs are generally levels we look for shorts off of. The reason I didn't short off this level was I don't believe at the time there was enough high volume nodes there for me to really justify the short. But anyway, we came to this level. We had these three areas telling us, all these value area highs, that this was a premium or overextended level. And then we broke through, or we fell through this level of liquidity here, this box here. So when we actually fell through this level of liquidity, you can see that we fell through this level of liquidity, but at the point of control, very clearly held this level, and we held this structure. And then the price tried to push back into this level of liquidity. And you can see here, the price pushed back, but it wasn't able to push through that level. And then we finally pushed through that level. So again, we rejected, we held this structure, this point of control, and then we tried to push through the liquidity, we failed, and then we finally pushed through that liquidity. So once we finally pushed through that liquidity, it's just a classic support turned into resistance. So I was looking for us to push through that level and then come back, because now that we actually pushed through this level of bearish liquidity turns into bullish liquidity, right? So now that we actually pushed through that level, you're expecting the retest back into this level and to push forward. And that's exactly what we saw. And that was $1,100 trade. So again, here, this level was a strong level of liquidity. And once we actually pushed through that level, I was looking for a retest of this level of liquidity that we had identified. That was a very critical level of liquidity there. And then we pushed to the upside, and it was literally a perfect trade, pushed to the top of the value area high. So yeah, so this is how we can use the volume profile effectively and get these very, very specific entries, sniper entries and sniper exits when it comes to scalping and trading. Now, again, you don't necessarily have to be a scalper at all to trade this, but learning this stuff just lets you really, really understand very deeply on a whole new level, no matter what strategy that you're trading, what's actually going on in the market. So you can find these like low risk, high probability setups. So you enjoyed that. Make sure that you subscribe to the channel, drop a like. You get a 100% free trading course at DanteTrades.com/free. I hope you enjoyed that one. Comment below, subscribe, and I'll see you in the next video.